Welcome to Avalara. We're here to help you tackle the complex and ever-changing world of sales tax compliance so you can focus on what you do best, running your business. Whether you're a growing family business or a large international manufacturer, we'll be with you every step of the way to help you manage your changing tax compliance needs as your business grows. We're excited to step into your corner and help your business thrive.
Hello, everyone, and welcome to today's webinar, Selling Internationally. Here's what you need to know before scaling. My name is Ashley, and I'll be your host for today's webinar. Today, we'll be covering staying compliant with value-added tax regulations, managing cross-border transactions, e-invoicing regulations, and recent and future tax changes in Europe. But before we dive into those items, I do have some housekeeping to cover. Just a friendly reminder that Avalara cannot provide legal tax advice, but we will answer your questions as best we can. On your screen is our safe harbor policy. Please take a moment to review that while I continue with some additional housekeeping. We are recording today's event, so if you want to listen to it again or share it with a colleague, you'll receive the recording later today. The console you're looking at can be customized, so feel free to move or resize the windows. Slides can be resized by dragging the bottom corner of the window or by downloading the PDF slide deck under Additional Resources. Under that Additional Resources sections are some other resources, including the slide deck. If there's any you'd like to check out, go ahead and click them now. If you have any questions during today's webinar, you can submit them using the Ask a Question box. We'll answer some questions throughout, and we also have time at the end for Q&A. You can also submit any troubleshooting questions you have there if you're having any issues with the webinar console. If you would like to join our group chat, you can click the button at the bottom of your screen with the little chat bubbles. That'll bring up the group chat on your screen. We encourage you to introduce yourself and make connections with fellow Avalara customers. So drop in the chat where you're calling in from today. I'm calling in from Iowa. And lastly, if you have any technical issues, there is a question mark icon box along the bottom with suggestions, or again, you can reach out using that Ask a Question box and I will help you out. We are offering 1 CPE credit for today's presentation. For those looking to receive CPE credit, please note that we will ask you to respond to 3 of our 4 poll questions. The poll questions will pop up on your screen for a limited amount of time, so please make sure you're ready to answer when the question appears. Please don't split or tile screens on your computer, as this can affect the placement of your poll question. Also, please make sure that you are on a desktop, as the questions may not appear on mobile. You must also attend the full 60-minute duration of the webinar to qualify for credit. Once you have met the CPE requirements, your certificate will be available to download in the Earn Certification box on your screen. You'll click the icon to access the PDF, and it will open in a new tab for you to download. You'll also receive the certificate in the post-event email. Unfortunately, we are unable to provide CPE credit to those who have technology issues that prevent them from qualifying. So if you do have issues with the poll questions, please reach out as soon as possible using that Ask a Question box. And if you have a moment, you can respond to the survey questions on your screen, or they'll pop up following the webinar. All right, so with all that housekeeping done, I would like to introduce today's presenters. First up, we have Brian Kelly, Global Solution Sales Specialist at Avalara. Brian, can you take a moment to introduce yourself?
Sure. Thanks, Ashley. So again, my name is Brian Kelly. I manage sales when it comes to international and cross-border services within the Avalara portfolio. And a lot of what we're going to go through today is showing the synergies of what you may know Avalara as today with regard to domestic services, and how we can match those same services and technologies to handle anything global or international.
Awesome. Thanks, Brian. We are also joined by Calvin Schaub, Product Solution Engineer at Avalara. Calvin, can you take a moment to introduce yourself?
Sure. Hello, everybody. My name's Calvin. I'm on the product solutions engineering team, and my role is to help companies understand how the software works and how it connects and works with your systems. I spent 2 years in the UK, where I learned a little bit about VAT, and I also focused on some of our services like e-invoicing and live reporting, which we'll talk about today. Nice to meet you all.
Great. Thank you for those introductions, Brian and Calvin. Before we jump in today, let's get to our first CPE question. So you should see that on your screen now. Just as a reminder, those looking to receive CPE credit need to respond to 3 of the 4 poll questions. So this is our first one. Where are you selling in 2023? Select all that apply. So US, Mexico, Canada, European Union, Europe, but not part of the European Union, or somewhere else. So select all that apply. You might have to scroll down to submit your answer, but go ahead and do that to answer the first poll question. And I will move us over to the agenda slide and pass it over to today's presenters.
Hi, everybody. So today we'll first focus on understanding VAT, then go into cross-border and follow that up with e-invoicing and live reporting with some content on current and future trends for international sellers. And then we'll have some Q&A at the end. To start with, we're going to focus on VAT. VAT, you may have seen if you've traveled abroad and gone to a restaurant or bought postcards, you may have seen VAT on that check or that invoice. So today we're not going to go really deep into what VAT is. We're just going to focus on very high-level concepts and give you an overview. So let's review a few points. Value-added tax is a consumption tax that's levied on supplies of goods and services. Those are taxable. Supplies you can read as really sales. So if you think of it, it's just a tax on sales and goods and services. From the, so what is it and how is it applied? So sellers collect the tax from consumers, and then they collect it at the point of sale by adding it to the cost of the product. And that's calculated at each step or stage of the supply chain. So if you look over to the right, from the manufacturer to the customer, there's a concept of output and input VAT. And so essentially on each stage, there's output that's charged and input that could be reclaimed. VAT is easier for governments to track than sales tax systems in general because it's levied at each stage of the supply chain, and essentially every producer and consumer in this chain has something to do in terms of recording tax. So that makes it easier for governments to go back, follow the transaction flow tied to the VAT registration number, and see it on the VAT return when it's sent in by the company. So that's a bit about the scope and how it's applied. Something we didn't cover, but I'll cover really quickly. We're talking about physical goods. There is a different kind of bucket or regime for digital services, and that does depend on if you're selling to another business or it's a consumer, direct to a consumer. There are different rules for digital services. Digital services are generally just electronically delivered services. We'd be happy to talk to you about that at a later date. We have guides, and we can also go through kind of the registration requirements there. But just focusing on physical goods mainly today. So we skip over to the next slide. VAT is, US is the outlier in terms of the sales tax systems, using sales tax as its system. Most countries in the world use VAT or GST, goods and service tax. You can see a list of countries here, just some of the main countries and outlying countries that use those types of systems. Again, US being kind of the outlier, using sales and use tax. Some countries call it consumption tax, like Japan. So in terms of We know that if you've been following anything with VAT changes in legislation over the past few years, you may know that we've had a lot of changes in the rules, and that's brought a lot of challenges for businesses. So in 2021, there were reforms for online sellers and marketplaces in the EU and the UK around where new thresholds were introduced and import thresholds were taken away or changed, and the definition of deemed supplier was expanded for marketplaces. So that's not even to mention some of the changes that are coming up. We'll get into a little bit later with VAT in the digital age being introduced in 2028. All of this is to say that if you're a business doing business outside the US, there's a lot to consider and a lot to follow. So if we look at some statistics here from the slide, a lot of companies say that they spend a pretty good amount of time on VAT compliance, anywhere from 1 to 5 to 16 to 20, if you see that bell curve over to the left. So there aren't very many companies that spend no time or little time. Most companies spend a fair amount of time in trying to figure out what their compliance requirements are. If you look over to the right a little bit, we'll have, I guess this would be the same if you ask somebody on the street in the US to explain sales tax. It's difficult and more difficult maybe for somebody in the US to understand a different system, even if you ask somebody in the UK or the EU or other countries. That's hard to explain. There are different concepts, it works differently. So just explaining it and understanding it, see from this response, 50% have trouble, may not understand all of it. So all of this, and we take that into account, and then we have a statistic around the businesses that actually use software or technology for calculating VAT. Only a quarter of them have some type of solution in place. So managing all those rules and challenges is really tricky, and not many companies have something to go off of in terms of a solution. So we now understand there's lots of rules and changes, some that have been enacted in the past few years, some that are coming. Let's look at some statistics on respondents from a survey from Deloitte around what the current state is for their business. So about 9 out of 10 respondents said that their tax budget will probably stay the same, and it may even fall. And so there's going to be limited kind of budget and resources, financial resources, to deploy for any kind of tax challenges. And then you look at the number of headcount, so actually, people in seats to help manage that process, use that technology, or do manual processes. Only around 34% said that headcount will increase in the next 5 years. So trying to do the same or more with the same or less is kind of the story. Finally, if you look at the actual changes and shifting kind of requirements around digitization of VAT and new rules coming out, everybody's expecting, and this is what we reflect, and if you listen to any other webinars, you can see that there are more challenges coming, and that will have a moderate to high impact on how companies look at their resources and look at their tools to address those challenges. And then I want to leave you with this idea that I always talk about. Brian probably spends a lot of time talking about this. If you look at the map of the world, if you're US based, you may have a pretty sizable market to address. You may have a lot of customers to go after. But in the grand scheme of things, if you look at the world, there are a lot of consumers outside of your country. And the way that I think about it and try and explain it is, we don't want tax to be a burden or a barrier to accessing those customers. We always want to have some type of tool and guide and resources to go after those customers to increase sales, to essentially lead to more profitability. And if you also look at the types of customers or businesses rather that sell outside the US, a lot of those are small exporters, small to medium-sized businesses that have just found a way, either depending on having guides and resources and tools like we provide, or out there in the market. And just polling our customers internally, around 80% of them said that they sell to at least 2 countries. And that's just the companies that I've worked with. That's where we see how companies can succeed and grow in the marketplace today. Finally, I just want to spend a little bit of time on how we look at kind of the suite of our services and how we look at working with companies. It's really kind of the same way that we look at companies in the US. We first want to look at what's your tax footprint, where you have registration requirements. If you do have registration requirements, then how do you go through that process? Because it is different than just registering in, say, a state or a local jurisdiction in the US. We're focusing today on tax determination and e-invoicing. I want to turn it over to Brian to talk a bit more about tax determination and how that relates to cross-border and customs duty.
Perfect. Thanks, Calvin. So I'm going to take this slide that Calvin just went through and I'm going to simplify it. So I'm going to discuss, as I mentioned during the introduction, what you know today about Avalara with regard to the right side of this presentation. You know Avalara as a tax automation company. You know Avalara as a tax research company, and you know Avalara as a compliance company. I'm going to show you how you can tie all of that in to expand your thought process to think Avalara is a global company. And I'll take each one of these product lines and show you what I mean when it comes to certain products. So product number one, where we know there's 15,000, I probably should know that total number in the US, but I concentrate globally, where we know us as a tax automation and taking all that complexity out of the calculation with US tax, that same thought process, take the automation and expand it globally. Our systems understand the rules and all the complexities that Calvin had mentioned earlier around global tax compliance, global calculations. So our systems have the knowledge and wherewithal to understand complexities for calculating domestic tax, as well as global VAT or GST, depending on that destination country. So just think of us in the calculation scheme globally. You take the next piece and we get into tax research. We want to understand here in the US what your product is. We're going to dive deep into understanding your product and understanding the taxability of your product. And as Calvin mentioned earlier, he brought up physical goods. If any of those products cross a border, there's a second piece to that now. We certainly want to understand the taxability, but what more and more countries are doing in order for you to move physical goods across a border, they want to identify that with a tariff code classification. You may even hear harmonized code or HS code for short, where taxability, yes, and tariff or duties or harmonized code for the products that are crossing border. Bottom line, we will do the research on your products to understand both taxability and what that tariff implication would be for the physical goods crossing a border. Tying both of those together. And then the third service, where again, you hear Nexus all day long in the US. Where do you have an obligation, or where do some of your clients have obligations? And where do you need support with filing and returns? You take that same concept, expand that thought process globally. Each country has their own complexities. Some countries are more difficult than others. There's new rules applying to each country, but the thought process remains the same. Where do you or your clients have an obligation to register based on what they're selling, based on who they're selling to? A lot of different parameters, but the concept, again, is the same. Where do you need support getting registered? And where do you need additional support having filings done on behalf of you or your client? Take all three of those main pillars, tie them all together, and continue to think globally in every aspect of what you know Avalara as. Now, we get into expanding into certain countries. We want to understand the calculation. Which countries do we have 170 or 190 different jurisdictions that we can do calculations for? We understand the rates. We understand the de minimis values or threshold values. Multiple rules, multiple countries, but just know the automation piece is there to take those complexities out, and we continue to expand our services into multiple countries. And again, some are more complex than others. So going through a true discovery phase is going to be super important when we get into these global conversations. I'll pause for a second there.
All right, it's time for our second CPE question. You should see that on your screen now. Similar to the first one, but this is, how does your company plan to expand in 2024? So you can make your selection. And while you do that, let's take a look at a couple audience questions that have come in. So first we have a question from Randy, and he asked, does value-added tax apply to physical goods, software, or services equally? If not, what's the best way to get acquainted with both or each?
Great point. And I'll touch on it. And Calvin, if you want to dive in after the fact. So physical goods, some countries are, tax is a lot easier globally, but some countries have a flat rate across the board, whether it's physical goods or digital goods. Other countries have discounted rates or zero rated products. And that's where the taxability and understanding the product comes into play, because you may have varying rates based on the destination country. You may have a flat rate across the board based on the destination country. Where the complexities come in is when you move that physical good cross-border, you have that second line item with tariffs. So that's where the complexity lies with calculations globally.
Right. And then maybe time for one more question. James asked, what is the difference between value-added tax and GST?
Yeah, I can take that one. There are slight variations in what goods and service tax versus VAT means. It's really up to the country to kind of define what those rules are. If we just compare Canada versus, say, the UK, one of the biggest differences is that Canada has provinces, that it's a semi-federal state where they allow provinces to kind of make their own tax, and then they have something called harmonized sales tax, as well as a federal GST. But the concept overall is the same. It's a consumption tax, and it's levied on whatever that country's tax authority deems a taxable service or a taxable good.
Okay, thanks. I'll pass it back over to you.
So Ashley, is my mic okay? Because I hear a little static, and maybe people can give some response. Hopefully not everyone's hearing some static in there.
You sound good. Maybe it's me.
Okay, that's probably me. Okay, so let's dive a little deeper. We talked about the similarities, what we do domestically and what we can do when it comes to global calculations. So let's take each one of these a little bit and dive a little deeper. We have a ton of customers that are looking for e-com type solutions. We have a ton of customers that have most of their client base is US, but now they want to expand globally. I've had customers over my 10-year career, they just dove in. We could just use international shipping and we should be good. That's not the case. You need to be prepared before you dive into the water, and you need to make sure you understand what each country's requirements are, and quite frankly, what your requirements are to make sure you're performing a good customer experience for your client base. So here's where the complexities lie. Are there customs clearance delays? Are there additional supply chain fees that are getting tacked onto these transactions? Do I even know what those duties and taxes are when my customer's checking out, or is it an unknown cost when it arrives in country? A lot of these things may get you the first sale, but ultimately will stop that consumer from going back to the website or going back and ordering product again, because the consumer experience was poor and the values and the calculations were inaccurate. They will not come back to that website or to that business to reorder again. So this is where we want to make sure you're prepared make sure that client experience is the key when you go into discussing cross-border. And we're going to get in a little bit more in depth. So as Calvin mentioned, calculations. Our system's going to understand whether it's a value-added tax or a goods and services tax based on destination country. Trade treaties. We heard a lot about this. We start talking about this in the US about who do we have agreements with other countries? Where do we have more favorable duty rates? We can predetermine that by doing an HS classification lookup and understanding that. Calculations of duties and taxes. You do not want to leave this up to a customs clearance agent when the product arrives. And we'll get into great examples in a couple more slides. You want to prep the accuracy up front. So we'll get into that. De minimis values. I brought that word up earlier. It's a threshold. There's a threshold for VAT. There's a threshold for duties. What are those thresholds? They vary by country. They vary by order value. We understand that in our automation tool. Managing the currency is localizing the experience, and HS classification and tariff codes. We'll get into a little bit more in detail. So what happens when you do not do the prep work and you dive into this without knowing what this HS code is? So here's the ultimate goal. I hit that slide too soon. The accurate assessment for landed cost is going to be key. I've seen a ton of merchants dive in, whether they give estimations, whether they just put a flat rate, whether they just inflate it to protect themselves. Consumers outside of the US know what their tax rate is. Consumers outside of the US know they're buying an authentic product from the US. They know what to expect when it comes to duties. There's a fee involved. If you're not doing these things properly and prepping this, by the time it gets to checkout, it's too late. And I'll show you how to prep yourself, and I'll show you how to make a better or an improved customer experience. And in my opinion, this is where it starts. The research portion of your product, whether it's digital, someone asked earlier, or whether it's physical. The tariff code is only attached to a physical good crossing a border. A customs clearance agent, they see boxes, they want to know what's in the box. Carriers, their main concern is moving boxes. They don't know what, and they don't understand the product. So understanding the product gets more in depth. Where was it made? What is it made of? What industry is it utilized for? I've seen a ton of merchants dive into this without understanding what that HS classification code is. And if you're not telling your carrier, if you're not telling customs clearance what that product is, they look at it. One, they want to look at it and say, is it even allowed to enter our country? And two, what's the ID so I can determine what that tariff rate is? If they don't know that, you'll see delays. And then once they determine what that code is, they always err on the side of the higher tariff rate. So you've just inflated your cost of goods to your consumer or a product crossing a border because you didn't do the pre-work. So harmonizing the product catalog is key, all right? Shipping companies, again, they move millions of boxes a day. They're not gonna know the specifics of the material. They're not gonna know what industry that product was made for. Quite frankly, they don't know the HS code, they're gonna guess. Using a customs broker will know that. They'll jump into it, they'll do the research, and they're gonna charge you because it's already in country and they know they got you. In order to clear it through customs, they're gonna charge you to give you the code, they're gonna charge you to clear it on your behalf, and it's a lot more expensive than doing the pre-work on the front end. And doing it yourself, I've seen customers do this, and if you have multiple products, it's time consuming. So there's a lot that goes into an HS classification ID number, and we'll get into a couple examples. So this is when you do not prep accordingly. Now, no HS code. So you're gonna get an order, Great, we just got an international order. We're going to box it up. We're going to send it to my carrier. The carrier is going to try to clear it through customs clearance. And just as I mentioned, they want to understand what that product is. If you're not assigning an HS code to it, they're guessing, or they're opening up the box and making their own determination, and they pretty much err on the side of the higher duty rate. That all comes with an additional fee, and it all comes with delays. Now the carrier will move it. If you did not collect these duties and taxes, someone needs that. Someone needs to pay that. Someone needs to be responsible for it. So if duties and taxes weren't applied, HS codes weren't applied, someone's knocking on your customer's door when that product arrives in country and saying, you owe us another 50 euro or 60 euro. They either pay it, hate you, and don't come back, or they say, I never ordered it, refuse it. Now you need to get it shipped back to the US because the customer refused it because there was unknown fees getting charged. This is the wrong, and this is the worst customer experience. You're probably better off them not buying it at all on the website rather than you shipping it to another country and trying to get it back. So do the pre-work. That's where Avalara comes into play. We're going to take the descriptions. It's a little hard to read, but we're going to take the item description. We're going to understand the category. We're going to understand if we need to do additional research. What's the URL? What's the website? Let's go into the website and dive a little deeper so we can understand what that HS code is. What is an HS code? I know I talked about it a lot. It's not a taxability code. It goes a lot more in depth. So it wants to know, in this instance, it's a fruit, gives you the main heading, the main chapter. Then it dives a little deeper. What kind of fruit? Is it fresh? Is it dried? What kind? Is it citrus? And then the subheading dives a little further into the product. Imagine t-shirts, cotton, polyester, varies from a different material. Men's and women's vary. Babies vary. All of these things make up a 6-digit, the first 6 digits of a specific code, which a customs clearance agent is going to want to see. Europe just changed the rules. You can no longer say it's fruit as a vague description. You have to have a code to tell customs clearance what it is. These final 4 tells them it's specific to that destination importation country. So this accurately assesses the duties and helps you clear through customs. And here's a couple examples. First 6 digits, universal, as I mentioned. You take this same product, rubber sole, leather top, men's sandal. You put the code 001 onto the Australia, it's 5% duty rate. If you incorrectly do that, each country is going to assess it at the higher percentage. So those 6 digits are universal. Leverage the additional 4 or 3 or even 12 to make sure you're accurately assessing what that tariff rate or duty rate should be. It varies by country. It varies by material. It varies by gender. And it also varies by industry. So if this product was truly made for medical purposes or ballet, there's a 0% duty rate on that. Customs clearance is not going to know that. Your carrier is not going to know that. They're always going to err on that higher side, as I mentioned. So understanding that fully qualified number will ultimately narrow it down by country, narrow it down by industry, and give you the accurate assessment for your duty and tariff calculation. One more thing. We will ultimately, through this service and through this pre-work, will ultimately identify if certain products are restricted from being shipped into that country. There's obscure ones too. I think it's bubble gum going to Singapore. You're not allowed. Ballpoint pens going to Malaysia. You're not allowed. Understanding that before you even attempt to take an order, or worst case, you ship it out and it just sits in customs. Do you pay to get it returned or you just tell them to destroy it? Pre-work, get the ID number on the front end so you can understand what you can and cannot do and what that actual tariff should be. That's the ideal situation. There's no surprises. There's no delays at customs. And I think I just hit the wrong button there. There we go. And it gets you this accurate, whether it's an invoice, whether it's an e-com, it doesn't matter. It gives you the accurate assessment for your product, what the de minimis values are, what the duty percentage should be, and what that tax percentage should be. So when you get to the shipping portion, one, the HS code is already on the label. You're telling that provider what it is. You've already collected the accurate duties and taxes. It clears through customs, and it gets to your end consumer without any additional fees being assessed. No delays, happy customer, repeat business. Prep work. And this is kind of a busy slide. I hate it and I love it at the same time. It just takes that full process and all the pre-work into consideration of how are we generating an invoice or an online sale? Where did Avalara come in? We've already predetermined the HS code. We're pulling that into the online store or the invoice. And then as we go real time to create the invoice or the e-com checkout, we know the exact rates that should be applied to help clear it through customs and get to the end consumer accurately and without any delays.
Okay, thanks, Brian. We'll try this audio again.
It's
time. It's time for CPE poll question number 3. That should be on your screen now. The question is, what is your top concern about selling internationally? So researching tax law, calculating the international duties and taxes, communication, shipping and customs, or something else. So just as a reminder, to receive CPE credit, you need to answer 3 of the 4 poll questions. Let's do a couple audience questions while you answer that. So we had a couple questions following up on the HS codes. One from Melissa is, are HS codes needed for digital goods?
They are not. Great question. Digital goods would be just value-added tax type of calculations, and HS codes only accompany physical goods. Anytime you're moving, the simple way to think about it, anytime you're moving a box or a physical good through customs, an HS classification code would need to be there to help them support the clearance purposes.
And I just add that like everything in tax, there's usually an exception. And Brian and I work with companies that sell into India. And so there is a requirement in India called the Services and Accounting Code. That is similar to an HS code, TIF code. You do have to have that for calculation if you do business in India, generally.
And then on a similar thread, do services have something similar to it, what an HS code would for a product?
Digital services or just maybe
just
any
services?
Mm-hmm. So services for the most part would fall into like that digital type of category where you're not moving a physical good. So I would say services would be more of a VAT and a GST, like a tax, not a HS code, not a tariff rate.
I will pass it back over to Calvin.
Great, thanks. All right, so now we're going to jump into electronic invoicing, we call e-invoicing and live reporting. You may have heard the term. E-invoicing is taking off in a lot of countries around the world. You may ask yourself what e-invoicing means. And like me, the first time I heard it, I thought e-invoicing was an electronic invoice, which is really just a PDF or some type of Word document that you can attach to an email and send it. That's not really what an e-invoice is, but like everything in tax, right, there's a little bit of an exception in Germany and France. But what we wanted to do today is talk generally about what is e-invoicing, the difference between e-invoicing and live reporting, and then go through some statistics and kind of how our e-invoicing solution works, e-invoicing and live reporting solution works. I want to make a big statement, the caveat first though. When we talk about e-invoicing, we're focusing on companies that usually the requirements are around that company that sells or does business in a country, whether they have operations in that country. So think of, there's a term called permanent establishment. If you're a US-based business selling into a country, likely not going to be too many requirements out there for you now. If you're a multinational or even a medium-sized business that has operations around the world, and you have offices around the world in some of these countries, then it's something to consider. You probably have already run across it. Your local accounting team or firm that you work with has raised it to you. So big caveat there. Now let's go into what we're talking about. So it's important to understand that what an electronic invoice is and what it's not. As I said, PDFs, Word docs, Excel docs, those are just digital files you can think of, and it's an attachment really, right? That you can put into an email. That's not really what an e-invoice is, and it's not what the countries and the mandates have come out to kind of create rules around. An e-invoice, if you look to the left, that's the unstructured or that visual piece. If you look to the middle and the right, then we're going to talk about structured data. An e-invoice is that kind of structured or machine-readable type of data or format that a supplier can send and be received by that buyer's accounts payable system or system of record. So there's no real need to manually enter or receive that invoice. So, and essentially, per definition, e-invoices are digital, and the idea that every country that has these types of mandates, the idea is to create a digital life cycle for that document, from issuance to archiving and to actually reporting and storing. So, like I said, there is an exception. Germany and France has something called Factor X, which is a specific type of format, which kind of has a PDF version embedded in that. It mainly uses XML. All right, hopefully that was a little bit of a long, just kind of definition of e-invoicing, but it's good to understand kind of the roots of it and the kind of details around it. So let's focus on what e-invoicing is versus live reporting. If we look at what e-invoicing is and what we just talked about, that's structured data and sending, receiving from suppliers to customers. You look at what that data really is and what that format is. So there are countries have adopted or used networks like PEPL, if you've heard of that. It's just a standardized network and format that countries can utilize. And that's really driven and kind of controlled by the government. Some governments tweak it a little bit, require a little bit of a change, and they release those rules. That's different from live reporting. Live reporting is a concept of that tax authority more or less being in the middle of the transaction flow. So you as a supplier maybe would need to send tax or transactional data to the tax authority in real time, and then either get a stamp, have that tax authority save it, or sometimes that tax authority has to send it off to the consumer on your behalf, and then kind of cycle it back through. So there is this parallel process of reporting and invoice data that the government is controlling that you as a supplier or you as the consumer may be receiving or sending. And that's also in conjunction, so there's kind of two systems going on here. If you do have reporting requirements, those haven't really gone away. You still have to file a VAT return or GST return in most cases if you have a requirement. So we're seeing big trends, and we'll get into this in a second, as companies move to more digitalization of their indirect tax systems, and we only see more countries adopting and expanding that definition of what kind of data they want. All right. So now let's talk about some of the e-invoicing kind of government, the requirements that we see around the world. As I said, more countries are adopting them. We see them every day. We have countries on the roadmap that are just opening it up. Some have already been doing it for a while, like Italy. You also see new band-aids that come out that solution or software providers have to build to. We are a participant in most of those. We actually have one of our leaders in the UK, Alex Wolf, has worked with a lot of governments and is on a lot of boards. And we also can participate in testing some of those systems. So us as a solution provider, we've already been working with a lot of these governments, have a track record with them. A lot of the mandates, though, as you can see, prohibit any type of paper or PDF invoices. So if you are doing business in a country right now that doesn't have any kind of mandate, there's a likelihood that they might stand one up soon. And then you as the business doing business there, having some type of economic activity, you'd have to look out for whether you can accept an invoice if a supplier sends you an invoice, or whether you can send one and do business in that country. And I should have started with this, the whole idea around this is that governments are trying to close what's called the VAT gap. They're trying to grab more money that they know that's due to them, and they can't find it through the VAT return and kind of the standard processes that they've had. Finally, we want to talk a bit about how Avalara is approaching this problem. Like how we approached sales and use tax, we've started by offering connection to our engine and through a REST API. We also have some pre-built types, or we work within some existing ERPs. The idea is we start from the left. That data, transactional data, will originate from your ERP or your billing platform. It's sent via a bridge or sent via an API. And then Avalara in the middle takes that data, converts it after a mapping exercise has been done with you, and then sends it on to the government in that correct format, correct file format, correct data format, and per that country's rules. So you can see over to the right, that continuation of the transactional flow hits the government's portals, and then we would respond and show a status, whether it's been accepted, and if there's any other action. That, in a nutshell, is our e-invoicing and live reporting tool. I have a lot of nice features and benefits. It being hosted, you can use it anywhere where we have coverage. You don't have to use various different systems, which is kind of how most companies do it today. And we also have the required kinds of things like QR codes or any kind of PDF creation. All right. And again, we are a certified PEPL service provider. So if you do business in a PEPL country, like a lot of EU countries and other countries, then we'll have you covered. Hand it back over to you, Ashley.
Thanks, Calvin. It is time for our last CPE poll question, which is, what is your key learning from today's presentation? So drop in the text box what you learned. I know we covered a lot today, from VAT, GST, HS codes. So let us know what you found most interesting about today and hit the submit button. And while you do that, we had a question on e-invoicing from Nancy and a similar one from Ahmet. What countries have mandated e-invoicing?
I can take that. There are a number, and I think it may just be a good idea to spend some time directly when we're going to talk about where you have offices, where you may do business. Most of the countries that have released, that have mandates out are in the EU or in the European region. There are some APAC countries, South America countries, but there's a list. And then we could go one level deeper and seeing what kinds of transactions you have in those countries, whether it's business to business, business to government, and then see what, we can help you kind of define those requirements.
Thanks, Calvin. And since we're close to the end, I'll let you close it out before we get to any other audience questions.
Sure, I'll take a few of these slides, and Brian, if you want to chime in here. So we have, as I said, there is a massive trend that we've seen in the past couple of years towards more digital reporting and that compliance. Traditionally, you've heard of what you had to do, and we're just focusing on mainly EU countries. You had periodic returns, you had to file, you submit a return, and those, you may have heard of something called FT. The idea, though, is many governments around the world have created some type of digital reporting. In the UK, it's called Making Tax Digital. In Spain, it's called SII. We're seeing, as those countries have enacted this type of legislation, it's spreading, and more countries are seeing that that gap is closing, so they're introducing similar requirements. So all that's to say is that as governments move to more digitalization of their reporting requirements, we see a lot of those becoming real time, which kind of leads into the e-invoicing discussion.
I'll add to that too, Calvin. And you were breaking up on my end anyway. I think it's my mic, but may not be everyone else. But the thing that you need to consider, these countries are trying to get a hold of the VAT gap, is what you'll hear from a lot of these countries. Where the obligation lies is just as Calvin had mentioned about where do you have an entity, where do you have specific business models or overseas within certain countries. But what these government agencies are doing, they realize digital goods, they don't always see that import tax that should be applied and should come to them. So a lot of these rules with e-invoicing and live reporting are there to help with that VAT gap. We understand what you're invoicing our business entity or government entity in our country, and we're ready for them to file. So we already know what they should be filing for, because in order to do business, B2B, B2G, soon B2C, but we know what should be coming our way with regard to a VAT or a GST because of these electronic invoicing and live data reports that are required.
Perfect. Okay, and then we just want to illustrate the number of countries. This is taken from the actual countries that have the invoicing requirements from our partner PwC. But you can see that today, there's just there's a very steep slope in terms of what countries have adopted and the types of requirements that you may have. A lot of these countries still have reporting requirements, so you still have to file a return. But we're seeing a landscape and a big shift. In some ways, this is kind of slow as other countries move faster or kind of meet in the middle, as the UK has done, where they don't have a full process. You still have to, there's no manual manipulation. But we're seeing, as we kind of have emphasized, governments really trying to reduce fraud, increase the amount of revenue that they know that that is due to them. So just by closing the VAT gap. All right. So I think we have some questions in the Q&A. Ashley, I'll turn it back to you. Yeah.
I read a couple questions as you were going, Calvin, and I'll touch on a couple, and then Ash, you could kind of take the lead on this. So are there annual thresholds by country? Absolutely. And it comes down to who are you selling to and what type of product are you selling and which country are you selling it into. So yes, there are annual thresholds. There are also order value thresholds. And some of you may have heard the EU and the UK created a new VAT scheme, I think it was 2 years ago, where now US entities need to actually collect and file directly to the EU and to the UK under what they call one-stop shop or import one-stop shop. So there's a lot of variables, and there's also annual thresholds similar to Nexus, as we talked about earlier. There are individual order value thresholds, and there's digital good thresholds, which vary from physical good thresholds. Depends on a bunch of things. So we definitely want to, you could probably look at 5 to 10 companies that look identical, and they may need it or may have an obligation for different reasons. So diving into all of those things, we need to understand.
Great. Thanks for addressing that. I know we've had that question 3 or 4 times. So we do have a product specific question from Amit. Does Avalara provide support for e-invoicing to all countries, specifically in the European Union?
So if you're talking about EU27, we can definitely check. I believe we have coverage in most, if not all. It would depend on the types of, some have released requirements as more of like a voluntary approach. And so we just want to have maybe a deeper discussion to where you do business, where you have offices, what kinds of transactions you have. But yeah, our coverage, we can definitely share a coverage map with anybody that would like to engage with us. PEPL certified, so in most of those countries, plus a few others.
And then we also have a question from Diane. Is e-invoicing strictly a B2B requirement? A business-to-business requirement?
No. So if you look at some of the mandates, the way the countries usually do it is they release they require companies that sell to the government to adopt e-invoicing or live reporting first, and then it moves to B2B, and then it moves to B2C. That's generally the kind of the shift or the trend. It is not just for B2B. Some countries, even today, I believe Italy is one that requires B2C transactions. And that's business to consumer if you're just selling to an end consumer to adopt e-invoicing.
Okay. And then we also had a question from Nancy. Do any countries have economic nexus if you have no physical nexus in the country?
So the terminology varies, but the concept remains. So the answer is yes, there are countries that have annual thresholds, and I'll take all. Once you sell over 75,000 Australian dollars into the country, threshold to where you should have a registration and you should be filing within Australia. So there are some countries that have, depending on what you sell, a nil threshold where you should have registration from $1 before you sell digital goods into that country. So it varies. It's not as similar as the States. It could vary from $1 up to, as I mentioned, 75,000 Australian dollars for the annual sales.
Right. Thank you. Well, we are closing in on the top of the hour. Calvin and Brian, just want to thank you for presenting today. Are there any last words of wisdom or anything you wanted to add before I close out?
Be prepared before you dive in.
It's very complex, and I think what I typically end with is we have lots of resources. Ultimately, I think it's best just to have a conversation with somebody, and Avalara is happy to help. So thanks for spending time with us today.
Great. Thank you both. So I just have a couple things to go over before we close out of today's webinar. For those that qualified for CPE credit, you can download your certificate now in the CPE certificate engagement tool. Your certificate will also be available in a post-event email that you'll receive within the next 4 or 5 hours. So keep an eye on your inbox. Also in the post-event email, we'll include a link back to this console, and you can view the on-demand recording, get the slide deck, and view the additional resources again. I would also like to highlight our upcoming Avalara webinars. So later this week, we have the 2023 tax changes, a mid-year update. And then later this month, on August 22nd, we have the impact of the Wayfair decision 5 years later with a customer panel. So you can check out those webinars and more at avalara.com/webinars. We also have 3 in-person opportunities left this year. So our Crush regional events offer Avalara customers the opportunity to learn, earn CPE, meet one-on-one with Avalara experts, and to network with your peers. We'll be in Chicago in August, San Diego in September, and San Jose in October to close out the year of in-person events for customers. So for more information on Crush Regionals, you can head over to avalaracrush.com, or you can check out the link in the post-event email. So thank you again for joining us today, and that concludes today's webinar.